Delta and the bear call spread. So before we go on the bear call spread, let's remind you what delta is. Delta is the rate of change in the value of an option for a $1 move up or down in the underlying share price. So below you're looking at a quote for SPY, and you can see we've brought in two expiries, May the 13th and June the 17th, and we've 5 different strike prices. So let's focus here on the 211 strike for May the 13th. And you'll see a delta value in the middle of your screen of 0.388. What does that mean? That means that for a $1 rise in the value of SPY, the value of the 211 calls will go up by 0.388. And for a $1 fall in the value of SPY, the value of the 211 strike calls for May the 13th will go down by 0.388. So let's talk about it in the context of a bear call spread now in greater detail. So again, just a couple of highlights of delta. Positive delta after a position means you want the share price to rise, and negative delta means that you want the share price to fall. So when we think of delta with the bear call spread, we've got to think of two call option positions. We sold the 211 call and we bought the 212 call. So let's look at that example again. So the delta for each strike price, so for the 211 strike price delta was 0.388, and for the 212 call delta was 0.305. But remember, we sold the 211 call. So now our 211 short call delta will turn negative. So that positive 0.388 will turn negative. And that's because we sold that call option. We also have the $212 long call, and that delta remains the same at a positive 0.305. So the net delta, so when we add these two here together, we get a net delta of negative 0.083. What does that mean? Or a negative 8.3 deltas per contract. So the reason we've got minus 8.3 deltas per contract is that in the options market, one contract controls 100 shares of stock, so we would multiply this number by 100. So for one contract we would have a negative 8.3 deltas. What does that mean in totality? Well, it means that for every $1 rise in the value of SPY, the value of our bear call spread position will go down by 8.30 per contract. And for every $1 fall in the value of SPY, the value of our option position will go up by 8.30 per contract. So you can see we benefit here when the share price is falling. Another way of looking at the delta position is that you can think of it as having a similar short position in SPY of 8.3 shares. Why do we say that? Well, if you think about it, delta tells you on a position what profit or loss you're going to make for a $1 rise in the value or fall in the value of the underlying shares. Well, if the share price drops $1, we're going to benefit, we already know, by 8.30. So that's the equivalent of being short 8.3 shares of SPY. But delta changes daily as the share price changes. So we need to talk about the other Greek now, which is gamma.